In this episode, we speak with Snejina Zacharia, founder and CEO of Insurify, a virtual insurance agent that uses AI and real-time integrations to help consumers compare, purchase, and manage their insurance policies. Insurify partners with hundreds of carriers and serves tens of millions of quotes each year across auto, home, pet, and renters insurance. Its platform enables consumers to receive accurate, personalized rates, access discounts, and complete their purchase online or with a licensed agent. With a background in enterprise software and global market development, Zacharia founded Insurify to create a more transparent and efficient way for consumers to compare and purchase insurance. I'm your host, RJ Lumba. We hope you enjoyed the show. If you liked the episode, click to follow.
RJ Lumba is the executive chairman of Market Insight Media and the managing partner of GrowthCap. He is the host of Great Entrepreneurs, a podcast for driven entrepreneurs and business owners. Our podcast covers all topics related to the entrepreneurial journey, from ideation to execution to optimization and to reaping the rewards of a well-run business. In the minutes ahead, we'll share with you unique insights and tactics from some of today's most accomplished and inspiring entrepreneurs.
Snejina, thank you so much for taking the time. It's a pleasure to be with you.
Hi, RJ. Thank you so much for the invitation. It's my pleasure.
So Insurify is the number one insurance comparison platform. I mean, there's 158 million quotes that have been offered through the platform. It's astounding kind of the volume that's going through Insurify. To start off, maybe we could explain how you came up with, the idea for the company.
So I was finishing my MBA at MIT and I had a minor accident and that caused a spike of my insurance premium. So I got very motivated to find ways to compare and save on my premium. I ended up going through multiple different sites and creating a complex spreadsheet to figure out apples to apples, how to compare quotes. I was so discouraged by the experience and it was so confusing and overwhelming that encouraged me to start digging into the industry and figuring out if there was a way that a comparison platform could be built. I remember having a conversation on the couch in the living table with my husband, and I was like, there must be a way that this could be done. I can't believe that this is 2013 and nobody has done something to help people compare quotes. So that's how Insurify was born.
And did you already have a sense for how the technology would work? Because it seems a bit daunting, right? It's the insurance industry that's like really hard to understand how they come up with their quotes. And then you're going to try to do it across insurance companies in real time, provide that to someone searching.
I had no background in insurance. If you think about how VCs evaluate first-time founders, I was female founder, a foreigner out of Bulgaria, speaking with an accent and outside of industry. So there were a million reasons why they shouldn't back me. But ultimately, what I ended up doing is I became a data miner of LinkedIn and giving the MIT logo and slogan and the kayak brand opened a lot of doors. So a lot of carriers were willing to talk with me and to share how they work, how they envision potentially platforms like Insurify. What I realized was the biggest challenge is that I was trying to create a model that didn't exist before because carriers are interested in working with either insurance agencies where you're expected to do it all with phone calls or call center, or do it all through a lead gen, in which case they're just buying leads or buying clicks. And I was trying to convince them to buy into a model that was allowing us to grow through a digital sell environment, but still rely on their call centers initially to be able to bind policies. So that took forever. Everybody was asking, who is going to be the first number 3, and then there will be the remaining, the 4th and the 5th. So it took a very long time to convince a carrier to join us. And we ended up signing deals with multiple agencies in the beginning. And that allowed us to quickly scale to 100 carriers on the platform. Once we built that, we were able to then go each one carrier and provide them the proof of what the platform is delivering and the number of sales we are closing. And that enable us to ultimately start signing the direct integrations and direct deals. But initially, we didn't start that way. And I guess the lesson here is that often people try to boil the ocean, and you ultimately have to be really flexible when you build a company, that it's not the only way. Yes, getting the direct care integration from the get-go would have been the ideal way, but you have to be flexible. So in my case, flexibility meant reliant on the contracts of agencies in the beginning and third-party integrators through the agency ecosystem to get started and provide a platform that wasn't providing an online buying experience, but was providing an apples to apples quoting experience. And then we were relying on the agencies to do the call center, call work, and close policies that way. And only after a couple of years of operations, we earned the right to start building those direct integrations. And now we are closing hundreds of thousands of policies direct. It's fascinating. We are the number one distributor for the majority of the major carriers in the United States.
Mm-hmm. So before, it sounds like it would have taken some time. If someone were to try to compare quotes and you have agencies on the other end and there's a call center, how long would it take to get like 3 to 5 quotes?
So I think that the notion in this industry is that people are hoping that by working through a traditional agent, they will be able to shop the market and they will be able to receive the full transparency of what all of their available options are. And there is an inherent conflict between that relationship because the agents are paid on the policy and percentage of the policy. So they don't have necessarily the vested interest in providing the customer, their customer, the absolute lowest quote. And also it's a black box. You don't know what the agents are seeing. So we wanted to make that shift and change the power from agents-driven or agent-powered to customer-powered. You're basically giving the customer the power to decide and the knowledge and the data to decide what are the available options for them, for their specific risk profile, for their specific background, because carriers are highly segmented based on risk profiles. And then based on the available market, provide recommendations, again, with data and with knowledge to help them make the right decision for a carrier. And some customers might be very price-based, so they will always choose the cheapest rate, regardless of whether or not the carrier is a mega brand or a small regional carrier. But yeah, price is important for everybody, but also the brand is important. The reputation of the carrier is important. So we spend a lot of time, not just to make sure that we are building the absolute best end-to-end online buying experience for our end consumers, but we are also allowing our customers to see reviews from thousands of consumers and educate themselves on what do people say about this carrier, and also provide other third-party data that allows us to really help the customer make an educated decision about their policy.
So now is it truly a pure kind of comparison where each carrier is indeed providing their accurate pricing, such that if someone enters in their information, you have, call it 5 or so carriers that will do the calculations and in real time provide their quote. And so there's no overlay of an agent trying to up that quote. So it's the best kind of comparison you can get.
Yeah. So just to be clear, the agents are not allowed to up quotes. I mean, there are some agents that add on fees, and that's really bad business. But generally, agents are not allowed to change the carrier quote. I think that the difference is by giving the user all the available options that are suitable for them, for their specific risk profile within a certain territory. And in some cases, we may have 10 quotes, and in other cases, we may have 5 quotes or 4 quotes, but those quotes that we present are apples to apples. So coverages are exactly the same based on our recommendation of what we believe the user should have as coverage based on their overall background that we've known. And yes, we provide these quotes based on deep carrier API integration. So that takes months to fulfill, to complete, and a lot of testing. So we are continuously working on optimizing the accuracy of the quotes and the experience. But all our quotes are directly driven through the direct API carrier quoting integration. So there is no difference whether the customer will go directly on the carrier or on Insurify.
Mm-hmm. I imagine these carriers really value the partnership because of the volume that's coming through the platform.
Yes. So we are actually taking to a whole different level the way we work with carriers, because the quoting side of the relationship is one way that we monetize the platform, but the other side is also through advertising.
Mm-hmm.
And the advertising budgets are enormous in the insurance industry. So what we have started building is helping carriers also be the best bidder on Insurify from an advertising perspective.
Mm-hmm.
Carriers value our insight because we've built a platform that is heavily driven on machine learning through customer acquisition and through the recommendations we are making. And we are basically putting that data science hat and data science team to support and help our carrier partners by ensuring that we are driving for them not just a very high volume of customers, but a high volume of customers that are at a lower cost of acquisition compared to all of the other partners that they might already have, and also are providing them a profitable book of business. And what that means for a carrier is that we are paying a very tight focus on loss ratios, on generally the profitability of the book of business that we are writing with each one of those partners.
And is it most of the volume is in auto? How much is coming from home, renters, et cetera?
So auto has been our bread and butter since the very beginning. So majority of the revenue is coming from auto, and that probably will continue to be the case maybe until we launch health. Health is the only other market that could be comparable in terms of scale and size. Since last year, we started heavily investing in our home insurance comparison and platform. We've always done home, but it hasn't been a major focus area for us. So now we have over 25 carriers on the home insurance comparison platform, and that has been growing very nicely. And renters has always been an add-on product, but now we are building a standalone renters comparison. And next year, we are expanding into also commercial liability and commercial auto, as well as pet travel and a bunch of other verticals. I think something that is also unique about Insurify is our ability to co-create products with carriers. So what we have realized is that carriers can leverage our data science and digital product development sort of capabilities to be able to create products that are dramatically outperforming their peers in the market. So we already have 3 strategic partnerships with 3 distinct carriers, and we are working on the 4th and the 5th right now. And the way we are going to market with this is we are still relying on the carriers for underwriting, but more or less underwriting and claims is all they do. And they give us sort of the ability to create differentiated products that might have different payment structures or different telematics offerings, different servicing offerings that are providing value that so far we see none of the other carriers on the platform are providing.
Mm-hmm.
So we're very excited about that experience. Another area that we are working towards is our wallet app. So we've always said we want to be the one-stop shop for all types of insurance, but now we will have an app that will allow the user to really do everything that they would dream of having if they had one contact, one superhuman agent that covers all of their different insurance needs. So we will allow for users to upload their policies and quote and upload and service and provide service advice that could be both driven through narrative AI, but also through our human agents. So really empower the human agents with AI to be able to do an even better job servicing our customers.
You've raised over, I think, $120 million, and your last round, I believe, was sizable. It was like around 100 million, if I'm not mistaken. The way you describe the business, you could see this running for quite some time and expanding, especially as you go into other products and you improve the technology and the speed. What's the next step here? Is there another big round of funding? And then, I mean, this thing could keep going as mentioned.
Yeah. The way we are thinking about fundraising is that our next phase will be likely an IPO, but we could also continue to build the product and the business independently. We are in a very fortunate position where we can also acquire companies, although we are very selective of who we acquire. 2023, we acquired Compare.com, and that brand on its own is now 120 million of revenue for the business. I think that we acquired them at the time that they were 10 million. So we've been able to scale acquisitions, but we are also very thoughtful with who we acquire because it takes a lot of effort and time on the management team and the development team to complete integration. So sometimes it might be easy to just build and buy.
And the revenue model from what you describe is mostly, we can think of it as advertising dollars coming from the carriers.
No, it's relatively well split between the commission revenue that we generate through the direct integrations with the carrier partners and also advertising revenue. So it's both.
And so is a big driver of this is your ability to get the Insurify people looking at Insurify related content.
So actually majority of our revenue is generated through our machine learning on paid marketing. Our marketing is run as a hedge fund. So we've built fully automated bidding auctions, and we are changing and improving on the algorithms on a monthly basis. That has allowed us to scale. And I think that that's probably the reason why we've outperformed the industry by far. We also have a very successful strategic partnerships team that currently basically embeds the Insurify offering within other mega brands like think Chime, Varo, Moneyline, and the likes. So we have an influx of partners that are coming to us now because we have a great reputation in the industry that want to provide sort of alternative offering within their suite of products, within their apps or within their websites with the Insurify offering. So we're very excited of what's ahead of us.
Amazing. We're coming up on time. I have two final questions. One is, can you tell us about a person who's had a profound influence on you?
I don't know if you'll be surprised. It's actually my husband. He has just recently joined last year as a co-CEO of the company. He is a serial entrepreneur, started 4 companies with an exit. More recently, he spent, I think, 17 years at Kayak, more recently as a president of Kayak, the search company. So yes, he's been my toughest board member, but also the person that inspires me the most and pushes me to do better all the time.
Awesome. Last question. Can you tell us about a charity, cause, or other endeavor that you're passionate about?
So we participate in multiple different charity organizations. The 9/11 is one. We also participate in food banks around Thanksgiving Day. We've sent donations when there were major earthquakes around the world. So we think that we are generally driven by just helping people overall and having a purpose. Something that has given me a lot of fulfillment more recently is being a guest lecturer at MIT and participate with startups and being a guest board member of MIT startups. So I just finished one yesterday and it was amazing to see so many smart people with different backgrounds and different ideas and the progress they're making every week or every month.
Is there a piece of advice that you like to share with new entrepreneurs?
That's a long conversation, but I think the short version of it is be patient. You will get a lot more no's than you will ever anticipated. So make sure you build a thick skin, but ultimately you have to be resilient. And the journey is hard, but make sure that you're also celebrating your small wins because the target will always be further ahead. And sometimes going back for myself, I wish I had taken the time to celebrate more. The most important thing is the team. Make sure you surround yourself either with very passionate and very committed co-founders, or if you're a solo entrepreneur, a very, very passionate founding team, because there will be a lot of ups and downs, and making sure that you're surrounded with people that are equally committed to the cause and they are there to cheer you and to help you push through when sometimes you don't see a way through, it is very important. And the final part around fundraising, it's all about people, and make sure that you raise money from good, kind investors with very high level of integrity, because there are a lot of top brands, there are a lot of famous brands from a VC community, but you always, always, always choose the best person, not the best fund. This is the person that you will be having a long-term relationship with. They will be there for the long run with you. So be careful of who you have on your investment community. And I'm a big fan of raising money from angel investors and early stage companies in the early stage of the fund. Don't raise money from big investors, because that's a kiss of death.
Mm-hmm.
If they don't follow, you will have a very hard time raising money from the end. But I'll close on a positive note. Enjoy the journey. It's hard, but it's also, you have to know that that will be your dream job if it comes true. So make sure you're celebrating it.
And one more thing, how about something specific to female entrepreneurs? Is there a slight nuance? I mean, it could be the same advice. Yeah.
It's the same advice. Just make sure that, what I've learned along the ways is that people make decisions. They have already decided 10 seconds within a call whether or not they want to invest with you. So be very thoughtful and sort of intuitive about, are you spending your right time fundraising with the right people? Because sometimes there might be investors that are just dragging along and they will never make a decision. So it's on you how you spend your time.
Mm-hmm.
The data, I believe, is 2% of all the VC growth money goes to female founders.
Mm-hmm.
So it is brutal out there. You and I need to do a whole new episode of
Right.
fundraising as a female founder.
Yeah.
I would bring my male founders on VC meetings, and I'll have meetings, unfortunately, in some cases where they will only look at my male co-founder. So there is a lot of stories out there, and I'm so glad that I don't have to deal with this anymore. But people that back you are people that have strong examples within their family. So what I learned over the years is that one of my investors, angel investors, has been backing female founders all throughout. He's a big believer in that. So pay attention on that. Like SoftBank came years ago, and when they interviewed me, I asked, how many female founders have you backed? And their answer was 0.
Mm-hmm.
0. So sometimes it could be their sister, or they have a daughter that they want to see successful. So there are different reasons that make people be more open-minded when it comes to female founders, but the numbers are there. Female-founded startups outperform the market.
Mm-hmm.
And a lot more profitable, overall a lot more profitable and more successful. So I hope that there are more investors that don't have the bias against us.
Well, that was a good statistic to end on for all those investors listening. Snejina, thank you so much for taking the time. It's been a pleasure.
Thank you so much. It's my pleasure. Have a wonderful day and happy holidays.